All right, we are live. Dude, all markets analysis. We're doing all markets today. If you have a request, drop it in the comments section right now. Any asset, whatever. Just drop it in the comments section. Anything that you want to see, any asset, I'm more than happy to go out and do literal institutional analysis for you. And if you don't believe me, I'm going to show you the institutional analysis here in just a second. Don't blow your freaking mind. But we're going to talk about NASDAQ. We're going to talk about the S&P. We're going to talk about gold. We're going to talk about silver. We're going to talk about crypto, Bitcoin. If you want other crypto assets, name them. If you want, stocks, name them. I don't really like doing Forex as much, but if you want Forex, name them, because literally the analysis that I do works on every single time frame, every single asset, and the methodology works like you wouldn't believe. Okay, so happy Friday Pie Day to everybody. If you've been watching my channel for long enough, you know that every Friday is Friday Pie Day, baby. So we're gonna get pizza tonight. Everybody should be smoking cigars. We took a lot of wins this week inside of, first off, gold and silver. We absolutely crushed it. Bitcoin is actually hitting an actionable level right now, right at 62.5. We've got the S&P looking like it wants to roll over up here, but I'm gonna give you the real analysis on where is the S&P and potentially the NASDAQ going to roll over at. And I have a secret weapon that no one else has, and it's called my proprietary deviation zones. And I'm going to show you that. And I'm going to teach you a little bit of what they mean and why they matter so much. And we're going to go on. We're just going to show you the supports, resistances. We're going to tell you where are the actionable trade setups, where are the actionable price points on whatever asset. So anything that you want to see, again, seriously, please drop it in the comments section, smash the like button for me, and let's just get straight into it. If I don't see your comment right off of the bat, it's because I'm knee deep, baby, knee deep, right? Not in the pool, but in TA, and we'll do it from there. If the sun gets too bright and my lights don't work and it dims me a lot, I'll go back here and I'll shut the curtains and put down the thing. But for now, we are good to go. So let's go ahead. Let's just go straight into the charts, man. Let's talk about gold first. If you have something else that you want me to see, again, you know what time it is. Drop it in the comments section. Everybody smoke your cigars, get your espresso. I actually have a Thai tea espresso. I don't know if you can see this. It is orange. It is orange, okay? There's this dope place in Tampa called Blind Tiger Coffee Roaster. Shout out to them. I'm not sponsored by them, but if they want to sponsor me, tag them. Would love to get their Thai espresso for free anytime that I want it. Now, let's talk about gold first, okay? I want to talk about some trades that hit for us this past week. So first off, you gotta understand this before we get into the technical analysis, okay? I've been trading for 10 plus years, okay? I figured out what actually works in the market and what actually drives markets, and it's one thing. It's literally one thing. And it's way simpler than what you would think. It is volume, okay? Not only volume, there's an asterisk on that, but the velocity of the volume. How fast did that volume come in on what time frame, right? Did it come in 5 minutes? Did it come in 5 days? Because there's a big difference in between the two, right? If I've got 100 million in volume that comes in on a 5-minute chart, that is way more actionable than $100 million in volume that comes in over the span of like 2 days, right? Or even 4 hours, okay? So volume is what matters. Now, I base my TA, every trade setup that I take, all of my analysis, every trade idea that I have, and my entire methodology, it's automated first and foremost, which is badass. But second, I base it off of these 4 concepts, and technically it's 3. It's supply and demand, okay? It's market structure, and it's naked levels. That's it. And you can, bring in for the naked levels, volume profiles, and VWAP, okay? But that's it. That is how simple this is. Now, I want to show you how simple some of these trades are that we took. We took a short from here, okay? And we wrote it down to right here, okay? There's a reason why we wrote it down to right here, and I'll show you the reason here in just a second. I want to show you why we entered the trade first. Price is going up, right? We have an institutional order block, which is supply above us, meaning we're likely to reject here. We did not quite hit it. We came within, a couple of dollars on it on gold. That's fine. And essentially we entered a short here. Why? Because the Alpha Intelligence, Alpha Structure Suite popped up this little triangle, and that triangle pointed to the direction that it actually wanted us to trade, right? So what did we do? We took that trade, but we didn't just take it because there was a triangle. If you take it only because there's a triangle, sometimes you're going to get stopped out. So there's a second criteria that we based this trade on, and I'm going to show you what it was. It's very easy to see that price was trending up here. What was RSI doing on that same time frame? It was trending down. That is what is called a bearish divergence. So when this triangle came in and told us, hey, you got a short, my only second confirmation 2 to take that trade, it was a bearish divergence. And it was very simple. You literally get RSI. It is a free indicator, and you can pick this out night and day, easy peasy, no problem. And actually, we train you on exactly how to spot this stuff inside of Alpha Intelligence if you get the indicator suite. So, do with that information what you will. Now, this trade right here obviously was a banger trade, right? We brought it down to here. Why? I'm going to show you. Well, if you go to order block suite, you will see that we mitigated an order block right back here. If you just go to the show historical and mitigated order block section, you're going to see some order blocks pop up right here. Look at that. It's right there. Boom and boom. And we mitigated that order block. That was our profit target right there. And we came straight to it. It's that simple, okay? So that's why we took this trade, and that's why we targeted profit here. Now, we also took a long down here, right? Which was right here. We took this long also right into this order block set, bang. And if you held on to that trade, you did get stopped out. But here's the good news. Watch this. It doesn't matter because there was an order block set here. You stopped out here. That's no problem because we had this trade, baby. Came right into this order block set and then hit immediately full take profit straight to the next order block. It's that simple. So those are just a couple of trades that we took this week on gold. We also took the trade here that came down into here. Take profit, no problem, whatever. And then we just recycled that trade right up again right here. Now, let's talk about where gold is going, okay? Because I want to make sure that people understand, like, what are the massive supports and resistances? We're going to go to the 4-hour chart for this so that we can see it a lot better, okay? Because order blocks is going to tell you exactly where all of that support and resistance is. And I'm going to be honest with you. If you clear right here at 45.50, your next resistance is all the way up here, but guess what? It's not much resistance. Why do I know that? Because it only has 7,000 in contract volume on it, and that's not a huge amount of volume. It's a decent amount of volume, but whenever your market is trending up, as you can see right here, we're trending up, right? And by the way, Alpha Intelligence called the absolute and exact bottom on gold. So just so you know that, it did it on silver as well, but that's neither here nor there. Once you get through this level, you are coming to about $5,000 to $5,100, period. That's where the 4-hour market structure highs are. And all you got to do is clear this high with a candle close, and gold is going to be in a 100% uptrend, except for on the daily chart, which is still in a downtrend. So now that we've started to switch this trend up, where do we need to uphold? Well, there's 2 levels. We're going to zoom in. I'm going to show you those levels, okay? There's 2 levels that we really need to uphold. First and foremost, I mean, you really just don't want to get below the 4-hour lows, but I'm going to be honest with you. Those are at $4,000. You're not going below $4,000 or to $4,000 on gold right now. Here's where you need to uphold this level right here, $4,200. And your last ditch effort is going to be like right around here. Okay. I don't see us going under about $4,200. I could see us maybe rejecting here at this order block, fading down, bouncing here, rejecting, and then coming down into here before we finally make our move up. Because gold, if you know anything about gold, it legs up, it legs down, okay? So your supports, $4,200, right? And then about $4,120, something like that, okay? Then, I mean, you have massive institutional support down here too, 28,000 in volume. Can you kind of see why? This is 28,000 contracts, by the way, in volume. Can you kind of see why I don't think we're going under $4,000? Because you have institutional volume from $4,000 to $4,085. That is hundreds of millions of dollars worth of institutional volume. You're not coming down here, not anytime soon. And if you do, you're going to catch a bounce there. You are going to catch a bounce there, okay? And, wait and see what happens, man. You don't have to believe me. You don't have to take action on any of this information. Watch. proof by verification. I'm not asking you to believe me. I'm asking you to watch and see what happens. And then we'll see what the probabilities are, because trading is a probability game. We just lost, right? We just lost. We took a nice win. We took a second nice win. Then we lost on that long. And then we won on the very next long. So like what, 4 out of 5 trades, 3 out of 4 trades, you win? Dude, absolutely insane win rate. So do whatever you want to do with that information. Let's talk about silver. Excuse me. So look at this big daddy, nice short that we took on silver right here. Look at this bad boy. Literally came right into an order block set, fully mitigated it, almost got stopped out. But dude, this is why it matters so much. And this is why I say, like, if you're entering here, you place your stop loss outside of the order blocks. It's literally that simple, okay? And this is where you would have gotten outside of the order blocks. And look where it came. Right to the top of it, rejected, went down, got a swing failure pattern, right? With, guess what? 2 more swing failure patterns that happened at the bottom that got a bullish divergence, okay? So you could have gotten out here, right? If you wanted to, but there was no bullish divergence here telling me to get out, right? But look what we did. Longed it, bang. There was an order block there, okay? There was an order block there. That was our take profit target. Then we longed it to the next order block, and then boom, you got the short, you got the double swing failure pattern, the double triangles at the bottom with the bullish divergence, right? The bullish divergence. Look at RSI trending up when price is trending down. Absolutely insane. Super easy trades to pick out on these assets, right? So let's talk about where silver is going to be going. All right, and I'm gonna zoom back in here, try and check the chat really quick. Nobody has said anything in the chat. That's perfectly fine. Let's come back on. If you have, and it's very hot in Florida, by the way, it's 100 degrees out here. So I will be sweating. I'm super excited. It's Friday Pie Day. We're having fun. We're doing technical analysis with the indicators. We took a lot of wins this week. We're feeling good. I'm going to be sweating. It is what it is. I'm in a black tee, right? And I live in Florida. So in any case, if you have an asset that you want me to look at, just type it in the chat, man. That's all you got to do. Type it in the chat. Make sure you smash the like button too. By the way, just really quickly, silver did call the bottom. Or not silver. Alpha Intelligence did call the bottom on silver, just so you know, okay? And we actually had that trade set up. Where's that? It's not that one. That's the trade that I was just showing you. Where is it? There's a long, maybe it's in the old trades folder. Right there, baby. Right there, baby. We caught the bottom, the absolute bitty bottom on it. Why did we catch the bottom? I mean, look at the risk to reward on this trade. It was like 38x or something stupid like that. Why was it the bottom? Because this is how easy Alpha Intelligence is. If you see a triangle come inside of the box, it's pointing to the way that it wants you to trade, right? So you take that trade, you place your stop loss outside of the box, right? Or you can place it under the SFP, which is the wick right here, the wick of that candle, right? And guess what else happened? These were your old lows. They're trending down, right? And look at what happened here. Bullish divergence. This is my bread and butter textbook setup. Swing failure pattern. Well, let's just call it what it is. The triangle happened inside of the box with an opposing divergence, meaning that there was a bullish divergence on RSI. It's that simple. And by knowing that and having the indicators, you literally caught the exact bottom of silver. And guess what? It caught the bottom up here. Boom. It caught the bottom here too. Boom. Right? It's that simple. It's just cut and dry, man. Now, where's silver going and what does it need to uphold? Ultimately, as long as silver doesn't go under $61.44, it ain't going down there. I'm going to be honest with you. It is not going down to $61.35, dude. It's just not doing it. But in any case, if it does hit this nice little order block set, you need to catch a bounce here. Otherwise, you're going to be coming down into a downtrend. You're coming back into the 50s, okay? That's where your next set of institutional support is. Ultimately, though, what do we really need to uphold? Honestly, we need to uphold 63.90 to about 63.70. That's where your 1 hour, your 30-minute, and your 15-minute lows are. And what that will accomplish is keeping everything in an uptrend. And it will also shift the 30-minute to an uptrend. If it's pink, it's a downtrend. If it's blue, it's in an uptrend, meaning that everything from the 4-hour down to the 1 minute is in an uptrend, except for the 30-minute chart right here. And the 12-hour and the daily are still in a downtrend, but the monthly and weekly on silver are all still in uptrend. So the long term is still up. The midterm is still in a downtrend, but the short term to like small midterm is in an uptrend. So all we got to do is shift this daily and 12-hour back, and we're going to be going up in a big, substantial way. Now, there is not a lot of resistance here, okay? We smashed through the $67 resistance. We smashed into it. We took all the liquidity up there. We caught a nice fade, and now we're pushing back up, okay? So long as we keep above about 63, 65, 63.50, call it, right? We are looking extremely good to come up here into the $69 range, break down that order block. Let's go to the 4-hour. I'll show you where we go from there. You got to let the indicators load because they're doing quantitative mathematics in the background while we're doing all of this. And look at where your next resistance level is, from $70.50 up to $73.50. So when I say we've broken down 67, it's pretty likely that we're coming up to about $70. That's why, okay? $70 to $74. There is 60,000 in cumulative volume up here, period, okay? This is insane volume on silver, okay? This is insane volume. You are going to get a rejection here. I don't care what anybody says. Mark my words. Mark this on your chart. $73.40 to $70.20 or $70.40, right? Mark this on your chart. Wait till price hits it, and I guarantee you, you are going to get a rejection because there is so much institutional volume up there. You also have a naked daily or naked weekly POC and a naked weekly VWAP that has 166,000 in volume on it. Now, you're probably wondering, and this is where the teaching comes in. Dude, Drew, what is a naked POC? What is a naked VWAP? Okay, so I'm going to explain this to you in the simplest of terms. A POC, the point of control, is a level that's inside of what is called a volume profile. And what volume profile does is it tracks every dollar worth of volume that happened in a certain session, whether that's like the New York session or it's a daily session or a weekly or a monthly, whatever it is, right? The point of control is only telling you where the highest amount of shares traded at an exact price point. So that's where the most amount of shares exchanged hands or contracts or coins or whatever it is, right? So when you see a naked point of control, what that means is that that session closed, whether it's a daily, weekly, or a monthly, and then price went down into a new session. When we return back to those levels, essentially what it's telling you is if you're under a naked point of control or you are above a naked point of control, there's two different things it's telling you. If you're under it, it's telling you that institutions were net short for that session. If you're above it, institutions were net long for that session, meaning when you come back to it, you're likely to see a rejection or at least price slowing down. The same exact thing happens for VWAP. VWAP resets daily, weekly, monthly, 3-month, 6-month, 12-month VWAPs, right? Every 12 months, VWAP resets. Every day, VWAP resets if it's the daily VWAP, and it leaves behind what's called a naked level. I'm going to show you how that plays out on the chart here in just a second. But when you see these naked levels, it's telling you all of the volume that traded during that day. So for this one example, it would be 166,000 futures contracts on silver traded during that week. And the average price that those shares traded at or those contracts traded at was this exact price point. So when price returns there, if it's under it, again, that means institutions were net short. If it's above it, that means institutions were net long. So when you return to it, you see price reactions, rejections, reversals, or at the very least, price slows down. And you can use these naked POCs and these naked VWAPs as profit targets, baby. Take profit targets. So I'm going to show you how that plays out. Sweating my you-know-what's off, okay? Let's zoom in. now that you know where the resistance is, right? Let's zoom in. I'm going to show you how this like naked stuff kind of plays out. All right, let's go back to the 1 hour chart. Let the indicators load. Let them do their thing. Let them do their thing, man. Okay. This right here, and you'll see it. It'll zoom in here in just a second. This right here where VWAP snapped up, let's actually just zoom it in ourselves, right? You're going to see it. Let it zoom, baby. These things do this all by itself. Like, I'm not doing anything. It zooms in for me. It brings it all. They're awesome, dude. This is what's called a naked VWAP, okay? And look what happened. This is where the daily session closed and VWAP snapped back up to price. Look what happened the very next day. What did it do? It came down and smacked that naked VWAP and then bounced and then went up to the live VWAP and rejected. Came back down to the naked VWAP, finally won VWAP back and started pumping. That is why these naked levels matter so much, man, because I promise you, when you see these reactions happen in real time, you're looking at the market in 4D with these indicators, right? When you see these reactions happen in real time, you're gonna be like, dude, what is going on, right? So we've gotten through silver. Let's talk about Bitcoin, man. Let's talk about Bitcoin, because Bitcoin is in a nice little area right now. Let's turn the indicators on and let's get to it, man. I'm going to come back to the chat. Give me 1 second. I'm going to come back to the chat and we'll talk about it. By the way, Alpha Intelligence, as you can probably assume, also called the bottom on Bitcoin right here. Just so you know, we took that trade. Guess what it was? A triangle that came into the box with a bullish divergence. It's that simple, right? The opposite of that is whenever you get the triangle that comes into the box pointing down with price trending up, and then you get RSI trending down. That's a bearish divergence. Really, really easy trade. Okay. Really easy trade. So we actually have this trade set up right now. We've had it set up since the 21st of June. So or July. So we've actually been waiting for this level to hit again. Why? Because it hit back here. And I was like, okay, we just take the full take profit up here. We just take profits up here. And then we wait for the trade to recycle, and recycle it did. And guess what? It's bouncing from the exact entry level that we were talking about. It's literally that simple. It's literally that simple. So long as Bitcoin upholds 62,150, okay, it is in good shape to push up. But if it doesn't, we are coming down to $60,000, okay? Why do I know that? It's very simple. Order blocks, baby. Order block suite. It shows me where the supports are. This is where your first support is, $60,000. If we lose this level right here, there is nothing to hold us up in between here and there. There might be some naked levels. But with institutional selling pressure this large, all those naked levels are going to do is slow you down. And look, actually, there's 0 naked levels in between here and there, dude. If you lose 62,150, you're coming down to $60,500 almost immediately, almost guaranteed. Now, what you will probably do is bounce from 60,000. And there's a reason for that. I'm going to show you the reason. There is a naked weekly VWAP there. There's a naked point of control there. There are order blocks there. We got to zoom out just a little bit for this. Sorry. Give me 1 second to let it kind of zoom back in. Naked weekly VWAP with 247,000 in volume on it. Naked daily point of control with 3,000 in volume on it. But then you have your order block here with an alpha score of 5. It's a 45-minute and 1 hour. This is good support right here, all the way down to right about here. So long as you don't lose 59.9, you're in extremely good shape, because that's where your naked weekly VWAP is, naked daily point of control. All support is right here at $60,000. It's within, it's you got to hold 60,000, right? Because then if you don't, and you lose 58.4, I'm going to show you some wild stuff, dude. We can't even see it. We have to zoom so far out. If you lose 58.4, dude, just watch. Watch this. This is going to look crazy, man. Crazy. Look where you're coming. $48,000, dude. That's substantial. So you got to hold 58 in order, or you're coming down about another $10,000 after that. Now, if we uphold this 62,000 $500 to 62.1, where could we potentially be going? I'm going to show you. We do have a lot of resistance above us, which is not awesome for Bitcoin, right? But your ultimate target would be right up here at about 66.5 and then 67,000, which is right where the 1 hour and the 4 hour highs are. That's where you shift the 4 hour back to an uptrend. But here's the problem. You got to get through all of these resistances. 1, 2, 3 big, massive resistances. This one probably being the most substantial. Once you get above 64.6, you're probably coming up to about 67. Okay, 66.5. Now, let's look at the volume. Yeah, this is not going to be huge resistance, so you'll probably get through that no problem. This is okay resistance. You'll probably stop here for a second like you did. Actually, we already did it. We already did stop there and we rejected right on the way down. So you're probably going to stop there, reject on the way up, and then have to try to pump back up into this one, right? Oops. Give me 1 second. Sorry. I'm getting trigger happy on the commands on my keyboard, so I apologize. But this is going to be your largest level of resistance. Look at that. 4,000 in volume. It's got 3 different order blocks on it. It's all the way up to 64.5. Once you get up above 64.5, you're looking to bring it up to about 67,000. Okay. Now let me hop in the chat and then we'll talk about the S&P really quick. This is great stuff. Andrew Kilpatrick, appreciate you, bro. If anybody else has anything that they want me to look at, seriously, please drop it in the comments section. I'll continue to cook, right? It's Friday Pie Day. I'll continue to cook on the charts. I have no problem with that. I have a Zoom in 5 minutes. I'll watch after. Man, I appreciate you, showing back up later, right? Now, again, and I'm going to tell everybody this is like, you do with this information, you do whatever you want to do, man. It is what it is. If you want to be able to follow this analysis, if you want to be able to follow my trades, if you want to be able to make your charts look like mine and understand where the institutional supports and resistances are and stuff like that, I'm more than happy to teach you on these lives. And I'm going to start doing that a lot more now. Probably going to start going live almost every single day from now on to like educate people on what really moves markets, what really actually like wins in trading, because all these other influencers are out here talking about bull flags, bear flags, trend lines, EMAs, SMAs, and it doesn't work. It doesn't work. That's not an edge. It's not an edge when everybody knows about it, right? You have to find the data and the mathematics that actually makes sense. And luckily, Alpha Intelligence does that like on autopilot for you. And it takes, 5 seconds to load on your chart. So fine. Do with that information whatever you will. You can try Alpha Intelligence and, you'll be able to follow my analysis. You'll be able to follow my charts. And I bet you it's going to make your trading a lot easier. Now, the one thing I will say is there is an introductory offer, and then we'll move into the TA. I do have to say this. You can try them for $7 for a week. Do with that information what you will. It's the first link in the description. They absolutely crush it. Go try them. You get full trainings. So not only as soon as you subscribe, and you can go and watch this on the page. It tells you all of this stuff. But just as a spoiler alert, because Drew's king of the spoilers, I do give you like 5 of the best strategies to use with these. So if you can't be profitable with these like day one, it's because you're not watching the videos. It's because you're not watching the trainings, man. And they're like 5 to 10 minute videos, dude. It's not like this crazy. You're not going to college here. You know what I mean? So let's talk about the S&P. Man, I got to wipe this sweat off. Hold on. Woo! It's getting wild out here, baby. It's getting wild out here. So I want to show you how one of my, damn, I got sweat in my eyes now. I'm dying. I'm dying, guys. I'm dying, man. So anyways, I do have this proprietary thing that I do teach people privately. And I'm going to show you, this thing is nuts. It's called my deviation zones, proprietary deviation zones. Only a few dozen people in the world know about these, and it's because I taught it to them. But I'm going to show you how they work. I'm not necessarily going to teach them to you because people pay big money for that. But I'm going to show you how they work. And, if you can reverse engineer it and figure it out for free, have at it. You know what I mean? But these things are super, super valuable. So you're probably like, dude, Drew, your order blocks can't do squat up here, right? Because there's no history up here. There's no institutional volume. You can't predict it. We can, and I'm going to show you how. I'm going to show you the reason why this rejected here, okay? And this is based off of purely market structure, okay? So the old market structure highs and Alpha Intelligence's alpha structure shows you this, okay? This is where your old highs were. How do I know that? Because it's telling me this is where we had a 1 hour market structure shift to the upside, shifting the 1 hour to an uptrend, okay? It's literally telling me that in the label, and it's giving me the exact price point that happened, and it's pointing to the candle that it happened on, right? By the way, Alpha Intelligence called the top here, called the bottoms here, called the tops here. This one would have probably lost. But again, this is why you got to have those extra confirmations with the bull flags, the bear, or not the bull flags and bear flags, the bull divergences and the bearish divergences. And guess what? It called the bottom on the S&P right here too. Just saying. So anyways, I know that this was the old high for market structure before we broke here. So what I can do is I know this is my low. Why? Because alpha structure is telling me it's this pink line right here, and we'll zoom in so that, you know, the indicators will, you know, zoom us in and show you this. So let them do their thing. Let them do it. I was about to do the Jeopardy theme music. Okay, so you got the nice little bounce from the support here, which is the order block, but this is where your 1 hour low is, okay? And it shows you this. It's the pink line on the chart. It shows you this. This is the 1 hour low. So what I can do is I can take my deviation zones from the old high to the old low, and it will give me the rejection points and support points once we crack that high. And guess what it did? It went right up and rejected from deviation zone 2, right? And then guess what it did? It came right back to the top of the range, the old highs, and bounced, rejected from it again, and now it's bouncing from deviation zone 1, right? It's getting, or it's not bouncing, but it's actually stopping and getting support there, okay? This helps you kind of predict all-time highs, because again, if there's like, you're getting new all-time highs, there's no volume up there. There's no precedent set for this. And I know people are like, oh, go and pull a parallel channel and do a trend line from 7 years ago that passes through this arbitrary point, and that's where it's going to reject. No, you need to base it off of mathematics, man. And that's what this does. It bases it off of mathematics. So that's why this thing, it's really, really accurate. So what I will show you, and this is just like, this is some inside track for you, man. If you pull it from the new lows to the new highs, your next rejection point, if you were to continue pumping up here, is probably going to be right around 7,900 to 7,915. And you might reject before that at about 7,875 to 7,850 right here. I could see this happening, right? Where you come down, boom, and then you pump up here, get your rejection. And if you're going to continue the uptrend, you're going to uphold this level and then uphold this level. And then you'll get above this one. Then you'll be able to draw a new deviation zone to figure out exactly where it's going to reject again, because you're going to have new highs and lows, man. It's badass, dude. It's badass. So like when you see these trending markets, by knowing these deviation zones, you can actually catch the trends on these markets. And spoiler alert to anybody that happens to give a F on a Friday Pi Day, that is going to probably be the next indicator that's included in the Alpha Intelligence suite. Just so you know, do with that information what you will. I know I'm like shooting myself in the foot because people pay me to teach them that, but if I can automate it for you, dude, that would be awesome, right? So that's what I'm going to try to do. I'm not saying that that indicator is going to be coming out anytime soon. I'm saying that's probably the one. If I've made a new indicator, that's probably the one that I would make. And look at where deviation zone 2 is. It's right at the support. It's right at the top end of the support, right? So if you lose this and then you start breaking market structure to the downside, guess where you're going to come? Confluence, baby, right into deviation zone 2 and into the first order block set that is your support. Let me show you. You've got 312,000 in volume here. I know a lot of people are like really waiting for the S&P to roll over. Dude, it might, but it might not. Because if it rolls over and it comes down here to 7650, dude, like to 76.35 to about 76.50, call it 76.80, right? So you got about a $45 range here. You've got 312,000 contracts that traded here on S&P futures, and you've got another 500,000 contracts that traded here. That is over 800,000 contracts that traded in a $45 range. You don't think that's massive institutional support and positioning? Dude, it is. Absolutely insane support here. Even if you lose that, at 75.60, you have another 420,000 contracts that traded at that level. That is also massive support. So even if you lose this, you're looking to long it again at 75.50, baby. And if you lose this, it gets real nasty. You're coming down to about 7,300. Like that's just what it is. So I would be watching this 70, where was it at? I would be watching this level right here, 7,900. And what I would also be watching is this level right here to see if you come up into here, swing fail, and then get your rejection and start moving down. Okay, those are like the actionable steps, because although everything technically, except for the 1 minute chart, right, is in an uptrend on the S&P, things cannot just stay in uptrends forever. Like you're gonna catch a fade. Like look here, dude, it called the top, you caught the fade, it called the bottom, you got the pump, right? And then it called the top again, then it called the top again, then it called the bottom. Now it might call the top again, dude. That's all I'm saying. Alpha structure, man. It literally it's freaking triangles. Like I could teach this to, you know, an 8-year-old and they'd probably kill it in the markets just by understanding this and knowing this. Now that we understand that, I'm gonna pop in the chat and just make sure that nobody's saying anything. I encourage you, please say stuff. Please say stuff. Like, let me know if this is helpful to you. Let me know if there's something that's unclear to you. Let me know if there's an asset that you want me to look at. And let me know if you're enjoying this, right? Like, is there something that I'm teaching you that really is just like, dude, I get it. You know what I mean? And obviously, if you want the alpha intelligence indicators, you know where to get them. You can have your charts looking like mine. But what I want to do is kind of like, I want to look at the NASDAQ next, right? Because it's going to be in a lot of the similar situation as the S&P, but I want to open it up to you guys and gals, right? And I want to see, like, do you have anything that you actually want me to like look at, right? So let's hop into the chat. Interesting learning your techniques. Yeah, bro, dude, seriously, subscribe to the channel. First and foremost, subscribe to the channel. I'm going to be bringing out a lot of content. Like, actually, we just brought out a lot of content. I'm giving away strategies, dude. I'm going to be teaching technical analysis. I'm going to be teaching all this stuff. Obviously, you know, we give out trade ideas in, you know, other places and stuff like that. You should become a member. I've been a member. Yeah, see, TC, he already knows what time it is. You should become a member. I've been a member for a while, and it's honestly a game changer. Bro, I appreciate you, dude. Seriously, thank you, man. Because, like, when I give these things out and I say these things, like, I understand the psychology behind it, like silence is approval. The people that talk the most, right, are the people that hate you and the people that are, like, feel wronged, right? So, man, it's really nice to hear when people are like, hey, dude, like that was really cool, or, you know, this was a game changer for me, because I don't hear that a lot, because people just kind of stay silent and take the trades. And I'm like, I know you're in the group, and I'm like, hey, who's taking the trades? Who's making money? And nobody says anything. And I'm just like, well, I guess they're out spending their money. I don't know, dude. But yeah, daily videos, levels, indicators, personal one-to-one. Yeah. Can't go wrong, dude. The whole situation, we've got everything. It's in the description. Just check the description on the Drew Wolfer YouTube channel. You can check it out. It'll say, you know, like VIP or whatever. Yeah, you got it. Boom. So let's talk about the NASDAQ. Seriously, guys, I appreciate you for commenting. Smash a like on the video. And if you could, dude, give me something that I didn't plan. Like, somebody seriously call me out. Call me out. Put me on the spot. Put me on the spot. Give me something so ridiculously obscure that there's no possible way that I could have planned on giving that analysis. And I'm going to be honest with you, I don't really do analysis on the NASDAQ, so I kind of already doing that. But give me something so obscure that, like, there's no possible way that I could have done the analysis before this. find me some asset to just test me on. Test me, test my indicators, test my methodology, and then we'll see where it goes. We'll get into it. We're going to talk about NASDAQ now. Where's my NASDAQs? All right, we'll go to the MNQ, baby. We got to let the indicators indicate. Let the indicators, look how fast those things are, dude. You want to know why we're rejecting here, baby? That's why. Oh my gosh, dude, these things call the tops and bottoms like you've never seen in your life, man. Okay, these things get me super excited. I'm sorry, I'm getting crazy. I'll tone it down. Okay, so bottom, right? Order blocks, revisited, boom, blast off, baby. Guess where it came? Right to the next order block set. Rejection. Called the bottom, double SFP into the order block, boom, 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 right up to the order block again, right up to the order block again, and now we are inside of the order block. We got a lot of resistance above us, man. We got a lot of resistance above us. Okay, you want to know why we bounced here? I just showed you. Bounced from the order block. Let's see what the volume was. 271,000 in contract volume here. That's why you bounced from here, man. Insane. You also bounced from here, double SFP into this order block right here that has 115,000 in volume. Dude, we need to start trading NASDAQ TC. Bro, this thing is crushing it on NASDAQ. I might stop doing S&P analysis. Screw it. We need to get NASDAQ up in here because then guess what happened again? SFP. Dude, that's two times in a row. And then it called the bottom. Dude, we're trading NASDAQ from now on, man. We're going to trade the NASDAQ. Double SFP, called the bottom on it. Absolutely insane. What was the contract? 348,000 in contract volume on this. That's why it bounced from here. SFP, the triangle into the box, boom. And it showed me that. Dude, I didn't even have to do any analysis. I don't even have to do analysis. Wow. Wow. Look at this. Let's zoom in. Let's look at this. This is going to blow your friggin' mind, man. This is going to absolutely blow your mind. Okay, so let's zoom in. Let the indicators zoom in. Okay, so here's your order block, right? We can all see that. Let's let the indicators zoom. Okay, they're good. You got the triangle inside of the order block, right? Let's see if there, you don't need it, but let's see if there was a bullish divergence. There was. Oh my gosh. Oh my gosh. Bullish divergence. Oh my gosh. Triangle into the box with a bullish divergence. Perfectly called the bottom. Went straight up into the next order block. That's how easy it is. You enter here if you want. You place your stop loss. Let's see what the risk to reward on this would have been. This is insane, bro. Say you entered on the very next candle and you place your stop loss outside of the order block and then you targeted the next order block as your take profit. 4x risk to reward trade. Like it's nothing, right? And then here's the next one. Dude, triangle into the box on 400,000 in volume on this, right? There was 400,000 contracts of volume. Let's see. We don't need it, but let's see if there was a divergence. There was not. Okay, so there was no divergence here. But let's see what the risk to reward would have been on this. I bet you it's not as good as this last one. 1.4x risk to reward. That's assuming you entered on the very next candle, right? If you waited for the pullback into the actual order block, right? Then you had a better risk to reward and your stop was under the order block instead, right? And then you got what? A 4x risk to reward trade. Dude, that is insane. The NASDAQ, man. I'm going to trade the NASDAQ from now on. Look at how easy this is. Now, let's zoom in. Look at this. Old highs, RSI going down, old highs, price going up at the top of the order block. Double, right? Oh my gosh. Double triangles inside of the box. Here's your trade. It was this simple. Here's your trade. You got the SFP, right here. You entered. You got the double SFP. You move your stop loss outside of the order block sets. And guess what? You just target the next order block set down, which is going to be right around here, right? That's insane. and you're actually getting caught up right here, okay? So that's NASDAQ in a nutshell for you right there. Let me delete all this stuff off of the chart. Let's talk supports and resistances, baby. What's actionable from here? Oh my gosh, that is so insane. That is so insane. We got a lot of resistance above us. This might actually be the thing that makes the S&P go down. I'm going to be honest with you. The NASDAQ and the S&P are so correlated. If the NASDAQ rejects here big, then the S&P is going to get smashed, okay? So let's talk about what needs to be upheld. Excuse me. Ultimately, we got to get through 30,400, and then your next level of resistance is going to be right here, 425,000 in contract volume on that. There's only 165 here. That's going to be big resistance. You're probably going to get a rejection here at 30,350 to 30,400. You're definitely going to get a rejection here at probably about $30,500. I would say probably right around here, 30,550. You're going to get a rejection. And then up here, dude, you're probably 1.18 million in cumulative volume contracts on this. Bro, you ain't getting up above this in it for a long time. You ain't going up above 31,000. It's not happening. It's going to take like weeks to break through all of this institutional shorting, right? Look at, they literally tell you what they're doing. They created the level there. They revisited it. They shorted it again. They created a new level here. They shorted it. They came back up into that level, right? And then guess what they did? They shorted it again, created a new level. They came right back up into it, shorted it again, created a new level, and then they shorted it, boom. Then they shorted it again, boom. They shorted it again, boom. They let it bottom. They came back up. They shorted it again, shorted it again, shorted it again. Dude, I mean, these things literally lay out the entire market's process for you. It's so simple. Yeah, we're probably going to get a big rejection here, in my opinion. But if we don't uphold 29,750, you're coming down probably to about 29.4 really fast, like really fast. Now, you're going to have massive support down there. Look at this, 818,000. So you're probably not going to go under 29.3. But if you do, your last ditch effort is kind of like right there. You're going to get a pullback here. And the three zones that you're going to pull back to is right here, 29.4, 28,850, and then 28,450. Under that, you're coming all the way back down into the 27s, almost to the 26s, right? So ultimately, you're going to get one of these three things that happens. You're going to bounce from here, and then you're going to come up here and probably reject, right? Or you're going to bounce from here because you kind of, got your little bounce here. It fell through. But here's the problem. If you come down to either of these two levels, this one or this one, you're breaking market structure to the downside on all of the longer term time frames too. So you're breaking the 4-hour, the 12-hour, the 1-hour lows, okay? And you're going to be heading for these daily lows down here, right? So ultimately, I mean, dude, you've got massive resistance all the way up to $31,000. And your next major resistance, if somehow you can break through this, starts at about 30,560-ish, right? Now, you do have a pretty decent level of support here, 1.41 million. So I don't necessarily see us getting much below this. You're probably going to get a bounce, reject from one of these, and then start coming down. Reject from here, potentially, and then start coming down into this order block set. And for the 4-hour lows, looking for swing failure patterns, little triangles down here, right? But that's what I'm seeing on the NASDAQ. I think you're probably going to catch a fade here. I think you're going to catch a nice fade here. It just called the top on it. You're probably going to fade down to right around there. Okay. 29,400, 29,400. Hopefully that makes sense to people. Let's hop back into the chat. How to be a member. I think I already saw all of these. $7 for 7 days is the trial offer for the same membership. Yeah. Everything, dude, anything that you sign up, like, I'm not going to charge you full price to try it out, bro. Like, you can try anything that I have for $7 for 7 days. And if you don't like it and you're like, dude, I hate this, no problem. You literally gave up one coffee one day to know, right? Just to know. Now, the one thing I will say is that once you get these on your charts, be prepared, because it's going to you're going to be like, looking at the markets in 4D, man. It's really, really cool. It's really insane. I use, just so that everybody knows, this is what I do for every piece of analysis that I do, every single trade idea that I give out, and every single trade I take is based off of this method and these indicators, period. It is a full system, right? You can go and check it out. I won't talk that much more about it. Yeah, dude, we're adding the NASDAQ, TC. Boom, we're going to smash the NASDAQ. People think they kill it on the NASDAQ. We're going to show you how to kill it on the NASDAQ. Look at just the amount of trades that you would have gotten just in this past week. I'm actually really, I'm super salty about that. I apologize to all the people that I have not been doing NASDAQ. We're probably going to switch from S&P to NASDAQ, baby. What's Hopkins saying? E. Hopkins. I got these bright lights in my face, so I can't read stuff really well. Drew's membership is well worth it. Bro, dude, I appreciate you, Hopkins. I said it earlier to everybody. The only people that ever speak up are the people that hate you. And it's nice to see people that are like, hey, this was great. I appreciate it. Yeah. Hey man, just go to the web pages, bro. I don't want to waste everybody's time. They're great, dude. Whatever you pick, it's great. There's information on all the web pages. Literally, you'll have a full understanding in less than 5 minutes. That'll be a way better understanding than I can give you in explaining this on the stream. And the reason is because it's targeted. It gives you everything you need to know in order to make a decision. You'll know everything that you get, everything that happens, and what it's going to do for you. But also because I want to get to the TA, because I'm having a lot of fun. So would love to have you in any community. Go check them out, man. They're right in the description. Will you ever add oil to your TA? The metals trades have been great. Dude, we've killed it on the metals, dude. Gold and silver, baby. Yeah, let's do oil right now, bro. But you're saying will I add it to the trade ideas and setups? Maybe. I'm not 100% sure, bro, because here's the thing. Every time I add something, that's why I'm saying if we're going to do the NASDAQ, I'm going to nix the S&P. The reason is because every time I add something, it becomes more work for me and more things that I have to manage. And in that case, yeah, start raising prices. And I don't want to do that to people, right? I want to give them what's actionable for them. I don't want to charge people $500 a month for something that, they can get for $50 a month right now. And they make their money back on one trade, right? I kind of want to keep it easy for people, but I'll consider adding oil. That's just one asset. I'll consider it, especially since oil is absolutely going crazy. But let's get into oil, man. Hey, people, please put me on the spot. Please put me on the spot. We've done analysis on gold. We've done analysis on silver. We did Bitcoin. We did the S&P. We did NASDAQ. We're about to do oil right now, okay? Which ones do you want to see? Do you want to see light crude or do you want to see Brent? There's two different ones, okay? They're both, the charts are going to basically be the same, but it's not going to matter that much. Give me an asset that's so obscure that just throw me a curveball. Somebody, please throw me a curveball. Go to ChatGPT and say, hey, I want to F this guy up on this stream. Give me a wild asset that's going to be hard to do TA on, and let's go do it. I don't care what it is. We should also, what's he saying? Cookie Monster. I recognize you, dude. Love you doing the live calls on here again. Would love to watch longer, but got to go do sports. Sports, right? I used to play sports. I was a D1 soccer player. So, dude, I salute you, man. We'll watch the rest later. Appreciate you, man. Happy Friday Pie Day to you as well, dude. Also create a day trading room. Yeah, that's where I'd have to charge $500 if because dude, people are going to make stupid money if I do a live day trading room. It's not going to be like those ones. I think everybody knows the one that I'm talking about that's going to put you in a 40% drawdown position and just leave it open. No. We're going to have an 80% win rate, absolutely insane trades. People are going to make so much money in that. I'd have to charge a lot of money for that. Plus, I would have to sit there and be on the charts all at the same time. So we're getting conflicting CL. You want to see CL? Okay, cool. Let's see analysis on SMH. Done. We'll do it. We're going to do not silver, oil first. We'll do oil first. Do you want CL or MCL. We've got light crude, and then we've got WTI crude futures. Doesn't really matter. They're both basically the same. They're gonna have the same chart. It's all good. Let me get this off of here. Boom. Let me put you on the charts, man. Let me light my cigar too. Ooh, just calling the tops multiple times, just calling the bottom exactly. Oh my gosh. Oh wow. That's super surprising. Alpha Intelligence called the tops and bottoms. That's insane. Let me show you some wild stuff, man. Okay, so Alpha Intelligence calls the top here, it fades, then it calls the bottom, then it goes, calls the top again, and then it doesn't SFP here, gaps down, dude. That's insane. Gets you a nice swing failure pattern, swings you down here, calls the bottom, pushes you back up, then it calls the exact bottom. Boom. See what I'm saying? Now, if you want to know how to do this, like obviously, you got it, you know, if you subscribe to Alpha Intelligence Indicators, it comes with the strategies and shows you exactly how to do this. But let's see if there was a bullish or bearish divergence here. There was not one here, but guess what? Boom. So this is a good teaching moment. That is actually what I call weak divergence, because it's basically like a straight line. Gosh, dang it. It's basically like a straight line where the highs are the same. So that's what I would call a weak divergence. Is it as good? No, it's not. And that's exactly why you went right back up and ripped into it, faked everybody out, and then gapped down, because it was a weak divergence. It wasn't a full-on bearish divergence, okay? So in any case, called the bottom here. Absolutely insane, dude. Full take profit right there. Let's just to do it. Let's see what the risk to reward on that trade would have been had you entered on even like 2 candles later. Let's say you entered 2 candles later after the signal had confirmed, and you place your stop loss below the box, and then you target up here. 8x risk to reward, dude. 8x risk to reward. I mean, dude, you didn't even have to go there. Say you just targeted the old highs. 6x risk to reward, anybody? Thanks, Alpha Intelligence. So, okay, we kind of see what's going on here, right? I think everybody can kind of see what's going on here. You got your rejection right here at the order blocks. You created new order blocks. You faded. I got to start letting it do its thing. It came right back into the order block set, and then guess what? It faded again, went down to the next order block set, bounced, faded from that set, bounced, faded from that set, bounced from the next order block set. See what I'm saying? Like it's not hard. This thing makes it so easy for you. It's absolutely insane. So let's talk about where's the resistances and the supports, okay? I think it's clear to see that we have massive resistance here at the 1-hour highs, just under the 1-hour highs, which is $84.61, okay? Oh my gosh, 40,000 in contract volume here. That's a lot of volume, dude. This one has only for reference, this one has only 11,000 in volume on it. This is 4 times the resistance. So you're probably gonna break this down, and then you're gonna head up into the next one, okay? You're probably gonna break this down and head into this one, and I would be watching for my triangles right here, and then I'd be placing my stop outside of here, right? Most likely, and I'd be looking for that short, okay? Now, ultimately, what do you have to uphold? You got to stay above $79. If you lose $79, you're probably coming down here to anywhere from 75.20 to 74.20. That's where your next like high level of support is, because this only has 1,000 in volume on it. This one's got 7,000, right? There's a big difference in between that. Now look at this one, 11,000 in volume, and it's right before the 1-hour and 4-hour lows. So if you want this to stay in an uptrend on the 1-hour, you have to uphold 74.25, essentially, right? And I mean, you could SFP it. Like what I would really like to see, this would be like your gangster trade, is if you got the triangle inside of this box right here pointing up, dude, I mean, that's where you're going to be looking for a massive trade to bring it right back up to about the $84 range. Obviously, you got to wait until you get down there because there's going to be, order blocks that, show you resistance on the way down. But ultimately, if you can get above 84.50, essentially, right? Show you where you're going. Probably about 90 bucks. Okay. You got 23,000 in volume on this. My guess is you're probably going to move through. Yeah, I would say you're probably going to move up to about 89.50. What you'll likely see happen is if you get through this, you'll get a fade. You'll get like a little bit of a rejection here. You'll have to like kind of really eat this block up, and then you'll come up here, reject at 90, and then probably start moving your way up towards about the $93 to $95 range. Your most critical and massive resistance obviously is going to be this one right at 90 bucks. But look at this one, 75,000 in contract volume. That's at 95. And then you have 30,000 in volume. This is your biggest area of resistance is $95, right? But you've got support here. You've got support here. You've got support here. This is your biggest level of support at $70.50. But ultimately, you really just need to uphold $79 on crude oil. Yeah. Let's see what else was in the chat. I forgot. You requested one. Oh, SMH, semiconductors. Yeah, that's a hot ticket item. Everybody wants to get the analysis on that because there's quite a few people that have gotten people actually absolutely murdered on their trades on the semiconductors. I think we all know who those people are. I think we all can agree after seeing what they did there, they probably shouldn't be an influencer. No one should probably watch them. And they have no risk management procedures in place. And that's super scary. Anyways, SMH. SMH. Just happened. Okay, let's go to the NASDAQ. Let's light Drew cigar. Let the indicators load. Light Drew cigar. The indicators will load faster than I light my cigar. Damn, they already loaded. Okay, great. Why am I not on the screen? All right, there we go. Yeah, the indicators load faster than I can light my damn cigar. Okay, public service announcement. I'm going to do one more request. If you have a request, drop it in the comments section right now because we're going to be signing off here in like probably 10 minutes or something like that. I don't want to keep this to much longer than an hour. I don't want to take up too much people's time. Obviously, I have things I have to do as well. But I will do one more request after I do SMH. So drop them and we'll find one. Okay. So on the semiconductors, this one's super simple, actually. Look, dude, I mean, this thing is crazy, crazy. If you don't uphold 545 bucks, you're coming down to about $500. You're going to get a 10% fade about as fast as you possibly can. Okay. Now, look at how well this thing works. Okay. You set the order block here. It had a fair value gap right there. Right. And guess what? You also called the top right here. Boom. Called the bottom right here. Boom. Right. Called the bottom right here. Boom. And maybe it didn't call the bottom there. Nah, it didn't. Came up, rejected from the fair value gap of that order block, moved down, created new order blocks with a fair value gap right here, tagged directly into it again, moved down, and then just started fading, 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 right? And now guess what you're doing? And most people are going to be like, this is an inverted head and shoulders. This is an inverted head and shoulders. Well, then why are you rejecting at the neckline, bruh? Oh, well, that's not the head and shoulders. This is the head and shoulders. This is the shoulder. This is the head, right? And now the shoulder is going to be over here. Well, okay, that might be true, right? But you got to stay above 565 because once you get into this, I mean, you can catch a bounce here. You've already caught a bounce here. If you look, you already caught a bounce inside of this order block set, right? You already caught the bounce right there. And then it went straight to the next order block. It's very simple. It's very cut and dry. Now, you've got to uphold this, but most likely, you're probably going to come deeper into this order block now. So if you don't uphold basically 548, you ain't moving up past this. Your inverted head and shoulders isn't going to play out, right? Bro, you ain't getting up above this. 508,000 in contract cumulative volume there on a 2-hour time frame basis. 508,000 shares in shorts came in 2 hours right there, by the way. That's institutional volume, homie. Like, that's crazy volume. Look at this one. 650,000 in support. Here's the problem, or 650,000 shares traded in a 2-hour time frame here, right? But here's the problem with that, okay? You have mitigated this by, oh no, you haven't mitigated it. You only hit the fair value gap. Okay, you're probably going to catch a bounce here. You're probably going to catch a bounce here. Boom. This would be your bounce point right around here, and maybe even up to here. I would say 50% of the way through here down to here. So what is that? 555 to 545. You're probably going to catch a bounce there, right? But then you're going to come right up here and you're probably going to reject because you haven't mitigated this at all either. And what does mitigation mean? It means you haven't actually come inside of the actual order block. You barely touched it. Whereas on this one, you came into the fair value gaps, but you did not hit the order blocks, which they're all right down here, okay? So you got to watch. Actually, no, you have. Look at the mitigation on this. 46%, 32%, 17%, 43%. Yeah, dude, like that's, yeah. Yeah, man, you've mitigated this. That sucks. So you're probably going to lose this support and be coming down into about the $500 range. This one, huge resistance. This one, another huge resistance. You got to get up above 618, which is the 4-hour highs, and these two resistances. And I mean, you see what happens when we hit these, right? Like, look at the rejection that happened when you hit this. Same thing's going to happen when you hit it again. Same thing's going to happen when you hit this one. And then you're looking to bring it up to about, I'd say 650 bucks, where there's over 1 million shares in volume that traded up there. The semis have support here, but they've got way more resistance than they have support. That's all I'm saying. So I would watch that. Plus, it's earnings season, dude. Like, stuff can tank really, really quickly during earnings season. Let's get into the chat really quick. Let's see if anybody gave me something. Yeah, man, I appreciate it, bro. Yeah, try them out, dude. Sorry, it's really hot here, dude. I'm sweating my you-know-what's off, my cojones. Yeah, dude, I appreciate you saying that, dude. Try them out. They're absolutely insane. This works for everybody. It doesn't matter if you're a scalper, day trader, swing trader. For long-term investors, bro, let me show you. Let's just go to SMH. For long-term investors, let's just go to the daily chart, right? Let's just go to the daily chart. Pretty cut and dry, right? Pretty cut and dry. It called the bottom for you here. It called the top for you here after you set new all-time highs. It created this resistance zone, and then you tagged into it on the very next day and faded. Then it gave you the swing failure, lets you sell your short at a profit, enter the long, and then all you got to do is just trail your stop loss up, right? And then boom, tanked out again, called the absolute bottom. Insane, dude. This thing works on investing too, not just trading. So you can trade, you can invest, you can do whatever you want. I wasn't even sharing this friggin' screen. That's my bad. Here was the top, new all-time high, created the order block, right? Then tagged it, moved down, created a new order block here, tagged it again, got the swing failure pattern. You exit your short down here, you hit the long, you trail your stop loss up, obviously, right? And then guess what? You reject again, you come down, you hit the order block, you got the bottom again. This is all happening over how long of a time frame? 53 days. That sounds like investing to me. That sounds like buying and selling and, stuff that's long-term portfolio stuff. If you're watching the replay on this, dude, let me know what you think in the comments section. I appreciate everybody for showing up. I hope everybody has a good hashtag Friday Pie Day. We'll try to do this a lot more. Hopefully you guys try the indicators and you see success with it, man. It comes with trainings. It comes with everything. Go check it out on the page. It's obviously everything that you need to know, or the pages. They're all in the description. So everybody go and check it out, man. I appreciate you so much. We hit gold. We hit silver. We hit Bitcoin. We hit the S&P. We hit NASDAQ. We hit oil. We hit semiconductors. We did all that in an hour and 10 minutes. And I gave you the exact institutional footprint of every single one of them in an hour. That's insane. And the reason is because we automated it, right? The indicators are doing the heavy lifting for me. I can't, like, the indicators are putting me on their back, right? Not the other way around. Because if you were to give me these assets, dude, I would have to spend like 4 hours before the stream setting everything up to get the highs from the 1 minute all the way up to the, monthly chart, the highs and lows, finding the swing failure patterns, finding all the naked daily VWAPs, naked daily points of control, all of the institutional levels, the order blocks, and drawing all that on my charts. It would take an hour per asset, and we do it in 5 seconds now. It's really cool, man. So I'm glad that I was able to show that stuff to you guys, and hopefully this was helpful to you. Let me know if you like this. We'll keep it rolling if you do, but I need to see some support. Like, I only want to give people what they actually want to see, what's valuable to them, and what they're going to show up for. So please, if you enjoyed this, if this is helpful to you, if you want this to continue, give me the thumbs up, man. Give me the thumbs up, hype the video, and drop it in the comment section and say, hey, Drew, please keep it going, right? I'll see you all soon. Thank you so much for showing up. Everybody have a wonderful hashtag Friday Pie Day, a beautiful weekend with your beautiful families. Signing off. Peace.